The first few days of April have healthy for the market as the benchmark index rallied more than 2% and hit a 2.5-month high on April 4. The rally was broad-based, but the maximum contribution of the sensex came from HDFC twin after new block of Housing Development Finance Corporation HDFC merging with HDFC Bank. Both the benchmark indices reclaimed crucially physical level with the Sensex above 60,000 and the Nifty going past the 18,000 mark. The Sensex surged 1,335 points or 2.25% to 60,612, the highest closing since January 18, while the Nifty 50 jumped 383 points or the 2.17% to 18,053. This was in addition to more than 1% gain seen on April 1. The first day of the April series and new financial year 23, more than 70% or 932 points gain out of 1,335 points in the BSE Sensex was driven slowly by the HDFC twin as combined weightage in the indices is going to the highest, while the same in the Nifty was 57% of total gain, with the rest contribution by the 45 stock as 3 stocks were under pressure in the 50 share index. Also watch the long a short HDFC Bank merger in conversation with Samir Arora of the Hewlett. The weightage of the HDFC Bank HDFC combined entity could be 16.4%, while their current ranking in the term of the weightage is third and fifth respectively in the BSE Sensex. Currently, Reliance Industry with 13.6% weightage and Infosys with 10.2% weightage hold the top two spot in the BSE Sensex. The mega merger between HDFC into the HDFC Bank will enable valuable unlocking for HDFC Bank to build a solid housing loan portfolio and play the housing cycle by enhancing the existing customer base. The merged entity could become the highest weighted single company in the Nifty 50 basket, said Naveen Kulkarni, Chief Investment Officer at Axis Securities. He added that this merger boosts confidence in the Indian economy and give hope for a brighter long-term picture beyond the ongoing Russian-Ukraine war and the rising inflationary concern. Also read, once must HDFC twins to top into Global Club of 100 most valuable firm led by Apple. He believes the next leg of the rally will be driven by the BFSI space as banking companies are likely to post solid Q4 financial year 2022. Earning driven by sequential improvement in loan growth. Moreover, the improving asset quality trend will continue for the quarter, bringing further confidence to the space, he said. The HDFC board on April 4 said its board approved a composite scheme of amalgamation for the merger of the HDFC with HDFC Bank and their respective shareholder and creditor. This was a long-awaited gesture for the company and by the shareholder. This merger will create long-term wealth for the companies. Shareholders said. Sudhanshu Singh, Director at the Institute of the Bulls and Bears Management and Money Market India Security, the amalgamation ratio is 25:42. A person with 25 fully packed equity share of HDFC will get 42 share of the HDFC Bank. Also read, HDFC twin merger may not free up enough FPI headroom for the stock inclusion in MSCI index. In terms of market to capitalization, the new entity HDFC Bank, after HDFC's merger with the bank, will become the second biggest listed corporate firm. If we take a April 4 market cap, the combined market cap of HDFC Bank and HDFC is more than 14.02 lakh crore, followed by the Tata Consultancy Service with the 13.739 lakh crore, while Reliance Industry remained at number 1 while 18 lakh crore rupees. The BSE total market capitalization reached Rs 272.4 lakh crore on the April 4, the highest since January 20, up more than Rs 31 lakh crore from the closing March 7, when the market had plunged to more than 7-month low. HDFC Bank settled off at Rs 1,654 on the BSE, up 9.8%, and HDFC surged 9.15% to the Rs 2,675.25 crore. The broader market to participate in the bulls party as the BSE mid cap and small cap gained 1.3% and 1.7% respectively, while all sectoral indices closed in the higher, with finance and bank index being the prominent gainer with a rally of 4.2% and 3.5% respectively. Disclaimer: the view and investment tips expressed by the investment expert on the Money Control Com are their own and not those of the website or its management. Money Control Com advise user to check with the certificate expert before taking the investment decision. Disclaimer.